Good evening, VV Nation. My name is Ryan. Always a pleasure giving you these videos. Now, who's excited for the roadshow tomorrow? Hopefully, I'll see a lot of you out there. Again, Charlotte, North Carolina starts tomorrow. The event during the day is free, the VIP session. I believe there's a couple spots available. If you want to try to attend that, just go to VectorVest.com/roadshow. Now, a lot of news in the market, right? More importantly, there's 4 big companies reporting earnings this week. 2 after the bell today being Microsoft and Meta. 2 tomorrow being Apple and Amazon, right? We all know about the tariffs and how that's affecting earnings and the market in general. So with tensions rising between the United States and China, I'm going to dive into these 4 companies. I've got a couple news articles with events unfolding this week that can affect these companies, their earnings, and your money. So if this is something that you're interested in, stick around and let's get started. Now, the first article I want to talk about is China's not going anywhere. And as far as a trade war with the United States, they've had experience with this since Trump's first administration, right? It all started with the semiconductor industry and restrictions on certain American designed chips to enter the country. Since then, China's had about 10 years to play catch up and put a lot of money into their infrastructure when it comes to AI and futuristic technology. And there's a lot of big names, big companies that you're familiar with that have been very successful at this. So let's scroll down here. First thing I want to talk about, some of the companies, right? We got JD.com, Alibaba. They just released their Qwen 3 model. And we all remember the DeepSeek shakeup that just occurred a couple of months ago. Now, that being said, look at this. Chinese electric vehicle giant BYD. That's another big name that's competing directly with Tesla. Another company would be NIO in that space. Look, we also got Robotaxi, Pony.ai. I'm sure a lot of you might be familiar with this company as well. And if we continue to scroll down, China's come out with their own Netflix. So you can see the advancements in China itself. Look, Alibaba releasing its first open source AI generational model. And also this year, China will be hosting the world's largest auto show. Now, here's an event that occurred earlier this week. Amazon was going to display its surcharges due to tariffs on their platform when you made an order. The White House did not like this at all.
Hi, Mr. Secretary. So it was reported this morning that Amazon will soon display a little number next to the price of each product that shows how much the Trump tariffs are adding to the cost of each product. So isn't that a perfect crystal clear demonstration that it's the American consumer and not China who is going to have to pay for these policies?
I will take this since I just got off the phone with the president about Amazon's announcement. This is a hostile and political act by Amazon. Why didn't Amazon do this when the Biden administration hiked inflation to the highest level in 40 years? And I would also add that it's not a surprise because, as Reuters recently wrote, Amazon has partnered with a Chinese propaganda arm.
That being said, shortly after, Amazon backed down from doing this in general. Now, another article coming out this morning, Wall Street waiting to hear from Tim Cook. Again, they report after the bell come tomorrow. But big news here, TD Cowen predicts that current tariffs could cost Apple about 6% of its annual earnings per year. So we can gather from these news stories that the tariff uncertainty is still lingering, but we're going to jump in the VectorVest 7 software, take a look at the charts, take a look at our proprietary indicators, and see if we can be on the right side of the trade. All right, enough of the bad news. We're in the VectorVest 7 software. We're going to take a look at our proprietary indicators, see how these stocks match up, see what kind of condition they're in currently. We've got Meta, Amazon, Microsoft, and Apple. Now, first thing I want to do is compare it to value. Our valuation is just what we currently feel the stock is worth. It's not a price target. You know, if something is overvalued, just means that investors are willing to pay a premium for that position. It's not always a bad thing, but in this type of market, I prefer undervalued stocks. If we take a look here, Meta at the top of the list, price action at 534 is undervalued. We value stock at 675. Amazon fairly valued, 179 to compare to 180, while Microsoft and Apple still overvalued even with the pullback. Now, if we take a look at our fundamental indicators, RV and RS, these indicators are on a scale 0 to 2. Above 1 is favorable, below 1 is unfavorable. That being said, being the Mag 7 stocks, fundamentally, hey, pretty sound group of companies, right? We see Apple here having the lowest RV, which is long-term price appreciation potential, compared to an alternative investment in a AAA corporate bond. So you can see Apple barely seen to outperform a AAA corporate bond. RS, a relative safety at the top of the list. We got Meta Platforms 1.41. At the bottom, we do have Microsoft. Now, as far as RT relative timing, this is our technical indicator. It looks at the short-term price trend. Not one stock is trending in a bullish manner right now. Meta Platforms and Amazon are tied with the lowest ratings at 0.68, just showing that the momentum and the magnitude of the momentum is still to the downside. While Microsoft and Apple, some of that momentum has led up. You can see these in the 0.9s here, still unfavorable, so the stock has been trending down overall, but that momentum not as much as the other two positions. Now, the overall ratings, all of them are above 1. This is a good group of stocks, but you can see here the technicals just not giving much hope for the bulls, and with all the tariff uncertainty and tariff concerns, I'm not too surprised by that. And I honestly won't be surprised if some of these stocks take a big hit going into earnings, not so much on what they reported, but what the CEOs have to say about tariffs in China going forward. Now, I do want stocks with good earnings growth rate. We see Meta Platforms 23%, Amazon leading the charge here 29%, Microsoft 16%. The only single digit number here will be Apple at 9%. We've all seen articles about Apple slowing down and especially taking hits from China as Huawei really starts to steal their market share from the Chinese consumer. First up, we've got Microsoft. See, Microsoft hit its high last year in July. So almost a year now, Microsoft's been on a downtrend. Hey, I get the reason, doing some bottom fishing at Microsoft, but my only warning when doing that is the stock is still overvalued. I got the 200-day moving average here, so you can see bears clearly taking charge as of late. The low came in at 344, the closest it's been to our valuation, which is in the low threes. But look at the earnings per share. The forecasted earnings per share still on the rise. But from another forecasted perspective, painting a little bit more foggier of a picture, the ability to grow its earnings on the decline, you can see the earnings growth rate was at 17%, dropped as low as 15%, but now currently sits at 16%. So the growth rate in earnings kind of flat over the last year, but the stock being overvalued, momentum to the downside. If you do want to see some confirmation to the upside, do got a level of resistance here coming in the top of the zone around 397, while the bottom of the zone is 385. Today we are seeing some rejection of the zone here, price action to the downside as investors brace for earnings after the bell today. Here's Meta Platforms, hit its high earlier this year, back in February 14th, high of $740, currently trading at $536. You see the valuation and price action both on a decline. I'm not a big fan of that, but of all of the stocks here, this one is the most undervalued, so I do see some bottom fishing potential here. However, sell ratings are still dominating, so it's kind of like catching a falling knife right now. As far as Meta, I could see a nice level of support around 413 to 397. And for confirmation to the upside for the bulls, coming in around 633. Earnings per share is on the rise, but again, the ability to grow its earnings, the growth rate earnings on the decline. I do like the double digits coming in at 23%, but we started at 31% a year ago. So you can see a lot of the forecasted revisions haven't been so great for the Mag 7. If we take a look at Amazon now, again, the growth rate and earnings dropping, but still coming in at 29%. And for a Mag 7 company, that's really good to have. But look, valuation on the decline, price action, way overvalued, hit its high earlier this year, coming in around 242. Now price action at 180. The stock is fairly valued. I like it in this market. I've had these level support here around 161 to 158. Price action holding here. If the bears do take charge after earnings, hopefully finding another level of support here. Otherwise, some confirmation would be price action going above its 200-day moving average, which currently sits at 199. Now, the earnings per share is still on the rise, and we're seeing a common theme here with our EPS is on the rise. You can see here Apple as well. But Apple, cautionary tale, this is the only one to be stagnant over the last few months. You can see the revisions coming in since the tariffs. Not a lot of favorable data when it comes to the forecasted earnings per share. And look at the growth rate in earnings at 9%. So of all the Mag 7 companies we've been talking about this evening, this is the only one that with single digits. The stock is overvalued. Can't get too warm and fuzzy about it. We're sitting right at a level of resistance right now, 214 to 218, currently trading at 208. If we do get a gap up from earnings, I'd like to see confirmation break out above the top of the zone here around 218. Otherwise, if the bears do take charge, we value the company at 155. And I feel like going forward with market uncertain, price action of Apple could get closer to our valuation mark. I hope you guys found this video informative to keep you on the right side of the trades, the Mag 7 companies. I do have some optimism for Meta, but as far as the other three, Microsoft, Apple, and Amazon, I see tariff concerns lingering going forward, so I'd be a little bit more concerned, a little bit more pessimistic, but I do see potential for buying opportunities over the next few months. Now, again, my name is Ryan. Always a pleasure. If you liked the video, make sure you hit that like button, subscribe to the channel if it's your first time, and I'll see you tomorrow night.